it's really a question of how solid is the economy of the country. And probably you'll see sovereign wealth funds go first, like Norway or Middle Eastern sovereign wealth funds. It would be much easier for them to move first into digital assets and a strong Bitcoin position. And then at some point, does it make sense? It makes total sense. Like, for example, it's probably worth $1 trillion to the Saudis to do this, right? If you're holding $500 billion worth of sovereign debt, reasonably speaking, you're losing 10 to 15% of your value a year. So it's a $75 billion a year cost to use a currency instrument or a currency derivative as your treasury asset. And if you flip the Bitcoin, it would probably be like an effective $25 billion to $50 billion a year benefit. So you're talking about $100 billion a year over 10 years or $1 trillion just to flip your treasury asset. But I think that we're still early, such that, the immaturity of the crypto industry in general with regard to regulatory clarity and the like keeps a lot of the really big money from entering the space. And, if you establish compliant securities, if you fix the accounting, if you establish, banking guidelines for how banks can custody this stuff, when that happens, I think you'll see bigger institutional investors go into the asset. I think the governments are normally conservative, but the ones that are most likely to go are the ones that have the biggest upside, the biggest benefit, right? And they're not in fear, right? And there is a political element, which is, like the Gaddafi element. If you look like you're organizing a different currency, maybe your regime will disappear.
That makes sense. I think I'm always interested in.
I'm not holding my breath for the countries that do it. It's the summary of that, nor do they need to.
Yeah, it's
the next step is families and companies to establish it as a treasury asset.
I see the treasury asset growth as being the predominant theme over the next 10 years or so or what have you. But I think it's we're also, I think, going to see rapid growth in the utility of fiat digital currency models like USDC, et cetera, that will just continue to have greater regulatory certainty, greater velocity. Will kind of create a little bit of a digital currency arms race that is happening and has internet scale and reaches eventually billions of people. And I wonder that if that combined with the treasury asset development that you're talking about might drive towards that synthetic model sooner rather than later, because people will determine that that's actually safer, that it's just a safer model.
It's rational.
Yeah, it's rational.
We just don't know how long it takes and how many people adopt a rational thing.
Yeah, no, it's fascinating. It's literally something I've thought about for a very long time, and look, in some ways, the last 9 years for me at least is like, wow, that's 9 years. It's a long time. It's gone really fast. On the other hand, but it's just given where we are on the adoption curve, and it seems to be accelerating. Like the next 9 years will be pretty dramatic.
What I think, Jeremy, when I look at the digital currency areas, in your business, you've got Tether, you've got your offering, you had UST, so one of the currencies was not backed by anything.
Right.
The other currency is maybe backed by something.
Right.
And your currency is, your offering is the most transparent.
Mm-hmm.
Back to this issue of, is it technically sound, ethically sound, and economically sound? Well, yours is the most technically and ethically sound. And the question was, with interest rates at 0%, if you store all your $50 billion at 0%, where's the economic model?
Sure.
Luckily for you, I'm staring at the swap curve, and right now the 1-year swap is 344 basis points. Believe it or not, the 30-year swap on the US dollar is 287 basis points. So the yield curve is inverted, but now there's a reasonable, ability to get to a 1-year risk-free yield of 3.5%. Which means that now you look at a conservative, responsibly constructed digital currency and you say, there's an economic model for that, right? And you don't really need to reach for yield by playing with DeFi and screwing with all these other mental gymnastics that are either ethically not sound or economically not sound, or technically, you're going to get yourself hacked in some random protocol. So that leads me to my next observation, which it seems like the next stop is, $50 billion in Circle becomes $500 billion in Circle. And the real dynamic here, which is not controversial, like every nation state adopting Bitcoin as its treasury reserve asset is controversial, and that's a heavy lift. What's not controversial is everybody in South America, everybody in Africa, everybody in Asia, everybody in the rest of the world wants dollars.
Digital currency dollars. Yeah, it's huge.
The dollar is strengthened against the Australian currency 10% in a year, against the pound 16%, against the euro 17%, against the Japanese yen 24%, and against the Turkish lira 102%.
Right.
So the totally, non-controversial observation is, in an inflationary environment, I ought to just swap my local currency for dollars on my smartphone.
Yes, right.
I can't trust the bank. Right. They're going to be
have economic freedom alongside it, have transactional freedom alongside it, and kind of vote with your smartphone what economic system you're going to participate in.
And why shouldn't that expand by an order of magnitude in a hurry?
Yeah,
it probably should. I mean, the short term.
I think we're certainly of the view that we could get to $1 trillion USDC in circulation, we don't put a specific date on that, but our view is and also carries with it we're in registration to become a
don't mess it up.
Yeah, don't want to mess it up.
You want to be public, you want to be transparent, you want to lock down all of your controls.
Totally. Yeah, and I think
and disclosures
can continue with that transparency and disclosure and regulatory clarity, and I think also there's technological things too, right? Which is continuing to ensure that this can work economically for people everywhere, that they can with a piece of software, merely a piece of mobile software, be able to transact for pennies on the dollar, so to speak. That it becomes super capital efficient and that can scale and other things. And by the way, we're quite excited about Lightning. We're quite excited about Taro, other innovations that are happening in layer 2 on Bitcoin, leveraging Bitcoin's fundamental soundness and security, and what that could mean for things like USDC as well. So I think we're paying really close attention to kind of these overall layered architectures and how that can translate as well.